Three big things in the last 3 days. Wednesday, Federal Reserve interest rate decision. Thursday, after the market closed, Apple reported quarterly earnings. And this morning, before market open, April jobs data. This is Jeffrey Kerr, Kerr Financial Group. Today is Friday, May 3, 2024. Let's get into it chronologically. It is Fed on Wednesday, no interest rate changes. There was some language that kind of discouraged any rumors that were out there about the next move being an interest rate hike, and that there's still hope of an interest rate cut in 2024, and the markets really like that, finished strong on Wednesday afternoon. Last night, Thursday afternoon, the Apple quarterly earnings came out, and we had talked about Apple being a laggard. The stock's down for the year. It's kind of fallen out of favor. Well, the revenues came in better than expected. I'm sure they guided lower to make sure that the headline was a beat. Second, China, which has been really a sore spot for Apple, came in not as bad as expected. And then the other big news was that they're going to do a huge stock buyback. So that means they're coming into the market at periodic times and support the stock, buy their own stock with their cash. They got a lot of it. So traders and investors now see it as somewhat of a floor that the stock won't go a lot lower and they can buy it here. Stock's up 6% here this morning on Friday. Lastly, jobs data, and the less jobs created in April than what was expected. The unemployment rate went up to 3.9% from 3.8%. So when you're dealing with this, this is bad news is good news, and that this gives the Fed some room to look at interest rate cuts, and so in fact before that announcement there was only one interest rate cut forecast for the 2024. Now after this there are two going on, two chatter of two different cuts going to take place in 2024. So it's going to be a interesting kind of reaction to this jobs data, especially given that the Fed's predictive ability is really challenged. Another quick thing I want to close with, and we can't spend a lot of time, but the Fed announced on Wednesday that they're going to do less quantitative tightening. So, two policy mechanisms that the Fed has: the overnight Fed funds rate, which they control, and that's the one everyone that looks at for their changes. And again, it's an overnight lending rate, but it does influence the rest of the market. But the quantitative tightening is a function of their balance sheet, where they, back after the financial crisis of '08 and '09, they were doing easing through this mechanism where they would send money into the banks and buy bonds off of their balance sheet and put them on their balance sheet, providing more liquidity for the system. Now they've been doing it in the last couple of years, like at a pace of I think 95 billion a month. They weren't getting to those points, but they announced on Wednesday it's going to be less than that, down to 25 billion. So it's a less tightening. So it's kind of an interest rate moving towards another interest rate cut too. So that I think is big news, and the markets like the Apple, like the slower jobs data, and under the hood like this less quantitative tightening. So thank you for listening. Have a great weekend. Be back on Monday. Thank you again. Goodbye.